Hi guys, and welcome to this quick Q&A session on how to analyze dynamic trading ranges. First of all, what is a dynamic trading range? As you maybe know, there are horizontal trading ranges where you can draw levels like this, okay, maybe more like this, and a bottom, maybe this one. And as you can see, price is somehow moving in between those levels. This is a horizontal trading range, but there are also dynamic trading ranges, which effectively change their appearance. They are dynamic because they move. They are changing their values. The borders are not horizontal levels, but they are more like dynamic lines, like Bollinger Bands, for example. So I'm going to present to you a new indicator that you can use from this day on to analyze dynamic ranges. And to find this one, you have to go on Tradingview. You have to go to the public library and use you can search for my name, Firefly TA, and you will find the adaptive range indicator in there. It is not yet in the public library. It's currently being uploaded, but you will find it there, and you can then activate it, and it will show you. It looks a little bit messy right now because we are on the wrong time frame, but it will show you dynamic ranges, and it consists of 3 different modules I'm going to explain to you right now. So the first thing I'm going to do is I'm going to switch to the 15-minute time frame, like this. And as you can see, this looks very familiar. When you have already experience with Bollinger Bands, this should look familiar to you. This is because I'm this script, or this indicator, is based on Bollinger Bands, but it is not the same. So these bands look like Bollinger Bands, but they are not the same. They are calculated a little differently, and I'm going to explain how to use these bands. First of all, let's have a look at the UI of this indicator. Here you can see that besides the version information, you can see that there's a market you can type in. It is not strictly bound to the chart you're using, so you can use data from a different market. And when you change the chart, it's important to know that you will have to change this value to the ticker of this new market. Then you have several presets available to you that you can use in order to adapt these support and resistance bands. As you can see, the module support and resistance bands is enabled, and this is the one we are looking at right now. So this preset is to customize this support and resistance band module. We're now on the 15-minute chart, so low time frame 15 to 45 minutes is a good preset to use. And as you can see, it shows you a dynamic trading range where prices are bouncing off support, where it is being rejected at resistance, and it's very dynamic. You can do the same. An example, you can also go to a different time frame, like 2 hours, or something like this. Let's go to the 2 hours time frame, and you will see that with the preset, you will get very similar results over here as well. So here you see this is how it looks like. As I said, very similar to traditional Bollinger Bands, but they are not the same. This is calculated differently, more adaptive, and yeah, I don't want to dive too deep. It's more for it's meant for a deep dive session maybe at some point, but yeah, it's essentially not the same as Bollinger Bands. So you can also look at higher time frames. I'm going to the 1-day chart. This is how it looks like, and you can already see these narrow zones where there are pressure zones, for example, here and here, and these usually mean we will see big moves. We are also in a very narrow range right now, so yeah, this will also probably cause a lot of volatility in the short term. This is how you can, for example, read this high time frame. Then again, you do have these resistance bands. As you can see, the price is grinding into them, is being rejected at them, is finding support at this range, support and resistance. So it's very reliable, and you don't have the work of finding the correct settings because you have these presets available to you that you can use. And I have already made sure that these presets do have significance. So the next module I want to show you is the center of gravity. The center of gravity is, going back to the 3-hour chart, the center of gravity is a really, really powerful and nice tool. So let me explain this to you. imagine you have a simple moving average. A simple moving average is, let me make this a little bit bigger. So a simple moving average takes in the dimension of time that you define as the length, the unit length that you are putting in, like for example, the moving average 20 or the 200-week moving average. This means the length is, in this case, in example 20 or 200, and you choose one time frame. So this is not a dimension you can alter. This is just you choose one moving average of one time frame that you are multiplying with the that you are calculating based on a certain length. This is what a moving average is. Of course, they are powerful. They are standard tools. They work very well. But the difference of this center of gravity is that it is a three-dimensional entity. This means besides the time factor, there is also the time frame that is incorporated into this indicator by doing multi-time frame analysis. So it's actually looking at multiple time frames at the same time, which is extremely which gives additional confidence to the data that is being processed there. It's not dependent on one single time frame, and it also takes in the volatility of these time frames. So it actually looks at multiple different volatility values that are based on the standard deviation. So you are looking at the standard deviation with a multiplication factor, and this means that this entity incorporates the time dimension, the time frame dimension, and the volatility dimension, and it's a three-dimensional entity. So it takes in vastly more, significantly more data than a simple moving average does. And the result is you get one entity for all time frames that you can treat as a center of gravity. And the center of gravity is an entity that makes price come back to it frequently. So when we are looking at this this entity, you can see when price is actually going, it's creating a distance between itself and this entity, the center of gravity, it's coming back to it shortly after. You can see this happening all the time. This is a common rule in this market, or in all markets. It's called mean reversion. And this is the ultimate mean entity you can get, because it's very, very, very reliable. And you can expect when price is above this, far above this, you can expect big moves, or at least attempts like this one to come back to it shortly after. The same is valid for when price is below. You can expect it to come back to this. It is like the center line of the market. And it took me quite some time to develop it, but it's finally finished, and I'm completely blown by how powerful it is. As you can see, when we get a rally, it is very far above. It's coming back, it's coming back, it's coming back, it's coming back all the time. And you can incorporate this one into your strategies, into your decision-making very, very easily. So this is about the center of gravity. Gravity, it's pulling price to it, so it has gravity. This is why I'm calling it like that. The third thing, the third module you can enable on this indicator is the adaptive SuperRange indicator. This is independent of the settings on the presets you use. It looks the same on all time frames. Of course, on the higher time frames, it looks a little bit more compressed like this, and on the lower time frames, it looks pretty far away with a big space, huge space in between these areas. But let me explain this. I'm going back to the 1 hour chart here. This adaptive SuperRange is based on the center of gravity, and it shows you a calculated support and resistance range that is adapting very fast to market circumstances. And it essentially shows you where price is very likely to make or to meet with resistance and support. For example, if you just use the standard settings, you don't have to customize anything. You can just use the settings that are in there, the standard deviation values and the length of 20, which is actually a pretty good setting for all use cases. So as you can see, price very often starts grinding into this. And when you now enable the center of gravity, you can see that price is above the center of gravity, so it is at risk of falling back below. It is at resistance because it's at this border area of this SuperRange. And when we see a rejection, or when we see weakness here with acceleration, we can expect return at least to the center of gravity. And when it goes back to the other side, like when it returns to the lower end, like in this case where Bitcoin dumped, it met with dynamic range resistance over here. It came back to the center of gravity, failed to hold it, and got fell into this range. Look how fast the range has adapted itself to this volatility, so to catch this move. And in order to adapt, to show the support shortly after this dump, the support range is now here. It's essentially this area. And you can see how this range is adapting itself very fast, very rapidly, after volatility has occurred. And this is very powerful. Bollinger Bands usually take some time to do so. This range is highly dynamic, and it gives you more opportunities to estimate risks. For example, in this case, you see price somehow, it's somehow holding the support here. It is below the center of gravity, so we have a good chance actually to go above it and circling around it, maybe hitting the top of this range. So there is actually some, it doesn't look abysmal here. We can make these assumptions based on this indicator. The difference of this SuperRange to the support and resistance bands is that the support and resistance bands depend on the time frame you're using. So, for example, if I look at lower time frames, I'm choosing a preset, so I can actually see where is dynamic support and resistance for the lower time frames. I'm going to switch to the 15-minute chart to look at this. Here you can see it is catching the tiny moves in the market, and price always comes back to the center of gravity, or tries to come back to this, as you can see. And this, you have to regard this SuperRange as additional support and resistance that is very, very significant. And when the support and resistance bands come together with a SuperRange, you have very strong resistance, like here and here. So we see failure. This is a way to analyze dynamic ranges in an easy way. Let me say this: analyzing dynamic range support and resistance is not an easy thing to do. It is a more advanced topic, and you have to understand a lot of different concepts in order to grasp what is happening here. It is completely different to looking at levels, for example. The advantage of this method is, let me go back to the 2-hour chart and take this one. Well, let me deactivate this one. The advantage of analyzing dynamic ranges is that you don't have to redraw your levels and your trend lines all the time, because these support and resistance entities are adapting by themselves. They show you where support and resistance is, where you can expect price to go based on the center of gravity, like this. It is, as I said, it's not a moving average, so this will actually pull price back to it. This is like a magnet. And when price is below, at the SuperRange, maybe at support and resistance bands you are looking at with your settings, and there's a support confluence, maybe there's a level 2, you can expect price to come back to this center of gravity. This is the way how you can read this indicator and how you can interpret the values that are shown to you. I think it's very powerful, but it's still experimental. I'm working on it still. This is my first release, and it's available to everyone. You can simply activate it in the public library. Search for it, and then you can start experimenting. Maybe it's something you want to use in order to enrich or to boost your decision making or strategizing. I don't know. But yeah, have fun with it, and on to the next session.